Hello, everyone, and welcome back to the breakfast show with myself and Jose here. Hope you're all having a wonderful morning or afternoon so far. Jose, how are you?
Pretty good, Neil. Pretty good. Happy to see that you're back. Hopefully, you had a good vacation, came back relaxed, and no longer mean to me.
Not at all. Not at all. Relaxed I am. Although vacationing is very tiring, I have to say. Vacation doing nothing is tiring.
No, but I saw you pumping out videos while at vacation, which is always a grind, which is always respected.
Indeed. Indeed. I mean, when there is something interesting to talk about, we shall talk about it. First of all, hello everyone in the chat. I hope you're all doing very well. And yes, I agree with Matt here. Heineken is exactly that. It's not real beer. It's not real beer. If you want to drink real beer, choose anything but that. And there goes our Heineken promotion.
Hit the sponsor ad.
But I'm sure we can find some real drinks to sponsor us maybe during a party. But yeah, it's been a interesting week last week. I did skip out on two live streams, and maybe we can talk about some semiconductor stuff. I know you talked about it in the video. I talked about it as well a bit. The AMD MI400 maybe pushing Nvidia to delay their Rubin release, although Nvidia themselves already responded to that and said that that's not true. But then again, if we go back to the Blackwell stories, when there is smoke, there is a little bit of fire. So what do you think about this whole saga?
Yeah, you know it's crazy, Neil. I feel like so much happened last week, but it feels like it's so long ago that I almost forgot that was just last week. And I agree with you. I agree when there's some smoke, there is something, some fire. So like you mentioned in the Blackwell era, we were hearing discussions of delays due to certain design issues, but Nvidia said, you know what, there's not really much of a things issues. We actually found something, but it's back and working, and it created a bit of a lag between the Blackwell. I think the Blackwell came out actually came out about a quarter or two later than intended. This time, I don't know why. If there is something truth to this, in my opinion, I think Nvidia is. I don't know. I mean, it's very hard to change a design. right off the, even if the product is coming out next year, right, next December, or the second half of 2026, it would be very difficult to make any major changes. I think it's just smoke here. I don't think there's anything to really worry about. Um, the only thing is, it is a major architectural change for Nvidia, and just making any major architectural change does create a little bit of hesitant for certain customers. Like we saw, changing from Hopper to Blackwell, there were some issues, but going from Blackwell to Blackwell Ultra, there's not much of an issue there. I think we're going to see maybe a little bit of hiccups with this architecture transition change, like when you go to Blackwell to Rubin, but nothing to be worried about as an investor. Um, I do believe, though, it's going to be an interesting time, because this MI400 and the Rubin is going to be the first time Nvidia and AMD are going to have a form of competitive product, in form of both being able to connect 72 GPUs together. Um, this is going to be the first time that's going to happen. That is crucial for things like inference. For inference, you need to be able to make one mega super chip, and that's what these kind of connections do. So that's what I'm going to be curious to see, how the market reacts to that competition.
And I agree here with SmackDown. Typical fake news. I mean, we've seen it time and time again, right? This news always comes out right before an earnings report. We've seen it last year with Blackwell. Like, they wait literally 2 weeks before an earnings report to see if the stock can react negatively. And it's not just with Nvidia. We've seen it more recently with Micron. Some analysts come out with some BS story, and then suddenly Micron comes out, and guidance is revised on the upside. So
yeah, and it's crazy for Nvidia. It's almost like a clockwork. Before earnings, every single, I mean, the last two were both issues about data center slowdowns that kept coming out. So I agree with SmackDown as well. It's typically before earnings to create some fear here on the stock, but the stock hasn't really reacted too much. I think the day of, it was down like 1%, but I think it's returned kind of those gains, and it's back over 180, I think.
yeah, I mean, when they made their statement, they went up, AMD went down a little bit. First of all, thank you for the super chat. Gonna pay the respect for DLO, DLocal. I mean, DLocal has performed very well last week. Looking forward to see more content from you. Thank you very much. And I do think that DLocal is now going to get a little bit more respect from Wall Street. Another name that's been getting hit is Duolingo, but yeah, it does seem like Duolingo is. I saw it got a KeyBank upgraded DLocal. Let me actually pull this one up real quick. And then maybe, I mean, for AMD, right? For AMD, the news, whether it's true or not, it doesn't really matter that much, because we knew that the MI400 series is going to be the one that's going to be highly competitive with the Nvidia solution. Now, we've also heard Sam Altman talk about it when he was on stage with Lisa Su. So again, I think we need to reiterate, it's not like AMD will replace Nvidia. It's just that AMD suddenly becomes a very competitive player, something it wasn't before. It competed very well with Intel, beat Intel at their own game. Now it's becoming highly competitive with an Nvidia. And again, if the market is going to be $500 billion, I think there is space for two players. And still, if Nvidia gets 80% of the market, that still leaves quite a nice chunk of money for AMD, revenue and profit-wise.
After you look at that, I do have a pretty cool charts that some information I found online, Neil, that I want to share here between AMD and Nvidia. But go ahead with what you have while I pull that up.
Yeah, so real quick on the Duolingo part, we have your KeyBank upgrades Duolingo to overweight from sector weight and sets a price target of $460. I believe the price of the stock right now was $330 or something like that. It is a company I now own in the portfolio. They're upgrading shares of Duolingo from sector weight to overweight with a $460 price target based on 38.3 times 2027 EV to EBITDA. In their view, the AI backlash was a bump in the road, and a combination of product, for example, energy rollout, September Duocon updates, and viral marketing efforts creates upside risk to estimates over the next 12 months. Further price optimization remains an untapped growth lever that could aid growth and profitability. We have layered in this into their 2026-2027 forecast and are now slightly ahead of street revenue and EBITDA. I mean, I've covered Duolingo since they went public, actually. It's been on the watch list for a year and a half now at 179. Now I finally own it. It's a very, very good business that is a bit misunderstood by the market, but I guess that's just the way it goes right now.
So you own Duolingo right now, Neil?
I do own Duolingo today, yeah. I mean, since last week.
Nice. So I'm guessing that's the one stock you might be talking in a recent video I saw that you sold
Correct.
one and bought one. Is that
Yeah,
it? Yeah. Okay.
the sold and bought. The sold is basically my Intel shares to options play,
Mhm.
which so far has worked out so well. I mean, on Friday, that option play was up 92%. So in 5 days, I made more with Intel than I did in the last
Until
2 years.
yeah, no, and that's not something definitely that I mean when I do my videos on Intel, it's want to be it's like I think that's the best opportunity for Intel right now is kind of the long term calls, just because this stock has the massive optionality, but it has also the ability to stay quiet for a long time. So you don't want to kind of use too much capital just sitting there waiting for it to turn around. So
Correct.
that was pretty cool. Um,
You
and
want to
then
show some?
oh yeah, let me share screen here. So there were some reports by Morgan Stanley, and people were sharing it. I don't know if you saw it, Neil, talking about kind of the total cost of ownership of a lot of these AI chips. And stuff like that. So first, this is only half the picture. So don't just read this picture and think it's extremely bearish. So first, this is the total cost of ownership for AI inference in a 100 megawatt AI factory. That is super crucial to remember. It's for super clusters. The first thing that you might notice, Neil, are what the most expensive are your Nvidia's GB200 NVL72 and your MI300 platform. But you can see that the MI355 is actually a lot cheaper to run. Now, the cheapest, which makes sense when running these big AI factories, is the ASIC players, right? You have your Trainium 2 and your TPU. So in this chart, this is lower is better. It means that it's cheaper to run this factory. And back then, right, Jensen used to talk about that it's all about saving, it's all about TCO. But if you have heard the recent GTC event, he mentioned the following: it's not just about TCO anymore. Now these are revenue makers. It's about who can make the biggest revenue player. And this is the next kind of story that Morgan Stanley shared about the overall picture, the profitability, which includes kind of the revenues and the total cost of ownership. And it's crazy how the most expensive product in forms of TCO is NVIDIA's GB200, but it's so well at kind of doing AI workloads that it actually makes the most revenue in forms of its utilization rate. So right now, if you have, and again, this is for 100 megawatt AI factories. So it's for those super AI factories happening right now. So the most profitable and the most revenue maker is NVIDIA by a large margin. The other ones, I would say you would kind of follow through with your TPU from Google here with about 74.9% margin, and then your Trainium with about 62.5. Now, unfortunately, right now, Neil, for AMD in these massive AI factories, AMD doesn't perform that well. It's actually a revenue loser, or it's negative profits. It's a loss maker. The main reason is what we talked about in the past. AMD right now doesn't have that solution of great scalability to make kind of like a unified memory, a unified chip, and that kind of hurts a lot of these. A lot of this when talking about massive AI factories. If maybe we were talking like a smaller data center or just for selected small workloads, this might be a different story. So this tells me right now that at least for the MI300, for the MI355, you're not really looking at those massive data center players for AMD. The big winners most likely going to be Nvidia. But I wonder how this is going to change when the MI400 comes out and when you will see kind of the ability to scale up into these massive AI factories. But I just wanted to show this because I know we talk a lot about total cost of ownership. So that's one of the biggest things that many companies discuss when talking about their AI solutions or even their internal ASIC solutions. But I thought it was pretty cool how Morgan Stanley, based on their internal research, so they obviously could be wrong, the biggest cost is definitely Nvidia, but it's also the one that has the biggest profits because it's able to generate a lot and a lot more revenue than any of the other players here. Any thoughts here, Neil, before I kind of unshare screen? Anything that caught your attention, or anything that you want to dispute that you see?
No, I mean, of course, the MI300 came out before the MI355, so we're still early in that journey, right? Because I think we could see that green bar for the MI355 go up significantly in the next 2-3 quarters, I would say.
Yeah, so I don't think it depends on like the actual revenue. It's them. What they did is they created this kind of simulation of setting up 100,000, a 100 megawatt AI
Mm,
factory, and based on how those workloads work, it's like, when you run a business, you're running, you kind of make
mhm.
these projections of stuff like that. So it's like actually running it. It's not based on the revenue making right now. It's like if all these companies had a 100 megawatt AI factory, this is what would be the money maker. It has nothing to do with market share or anything right now. It's more of just the components, the workloads, and the ability to kind of produce those workloads into some form of profits or revenue.
Okay. No, I mean, I guess no, it does make sense because I'm zooming in now. So, I mean, the MI355 is more profitable, but still
Yeah,
losing money.
marginally better. That is
Yeah,
wild. How
yeah,
how,
yeah.
how great that. Um,
Uh, but that's interesting. Is it? I mean, that is interesting because, of course, Nvidia, that's that full rack solution. Mm,
mhm.
but then again, the others are significantly higher as well. Like Google's and Amazon's
Oh.
solution are significantly higher than
Yeah, and
AMD
that's the thing.
today.
Both of them are also scalable solution. Like with the TPU, you can scale massive amount for a lot of AI training, right? A lot of the Gemini training happens on TPUs, and the Trainium 2 also is very good at that scalability solution. Anthropic actually trained some of their models on Trainium on the Trainium platform, so it kind of really showcases that the scalability of this, it's what's really making that profit maker player, and that's why the MI400 is, in my opinion, I think we're gonna jump to those 50 plus percentage just from the MI355 to the MI400, because it does seem like scalability is what really determines a lot of this profit makers for it, because that's what the TPU and the Trainium 2 have over the AMD platform right now, is you can scale for both training and inference, something that the MI355 and the MI300 still lack.
Okay, no, that's interesting. That's interesting. I mean, I guess that's why they're trying to move as fast as possible. But the MI300 didn't come out that long ago. They came out with the MI355 or MI350 series because clearly here the profile, the profitability profile is just so much better. I don't know exactly when the MI400 will come
Yeah.
out.
Mhm.
Probably mid
Yeah.
late 2026.
And Stevie had a great question here, Neil. Does this mean companies like Meta are losing money on AMD? The answer is no. This is only a simulation if you're building these massive AI factories, right? The 100 megawatts. Not every data center being built out is that type of player. And it's also depending on the overall workload. I think companies that are purchasing AMD, they only need them for small, scalable solutions, and in those aspects, I would expect this to be dramatically different than kind of building a 100 megawatt AI factory. So, for companies like Meta and maybe others that are just using it for unique inferencing ability, the size of those data centers are completely different. The size of those servers are completely different. So the profitability margins are going to be a lot better than that.
Yeah, I agree. I think we had here a couple of questions about maybe the upcoming, but we'll do definitely videos and live stream before Nvidia um, reports, which I think is what, next week. Yeah, I think it's the last week of
Oh,
August.
nice. That's wild. It's already next week.
Yes, we have I think Nvidia, Adobe, Salesforce yet to report earnings, Alibaba yet to
Mhm.
report earnings as well. So we'll definitely share more information as we get closer
Yeah.
to that earnings date.
Um, I have a question for you, Neil. I know you're big into Nebias, and I know one of the biggest bullish in I don't know if bullish or bearish case. One of the things that Nebias investors, I'm not saying you do, but I've heard a lot. Nebias investors kind of like to egg on CoreWeave because CoreWeave does about a 6-year GPU depreciation, where Nebius I think does 4 years if I'm correct. 4 year, right? But during the last earnings, I don't know if you took if you read CoreWeave's transcript or listened to their earnings. um, they mentioned that they're still renting out the A100s, which are more than 4 years already in production. I think they even mentioned the generation before that as well. Um, Curious on your thoughts on that, right? They are taking longer to depreciate that value, but they mentioned it. I don't know how true it is. There's definitely seeing extensions on a lot older GPU generation still. Do you see that as a bearish case or bullish? Like, is it more bullish for Nebius to do 4 years opposed to 6 years? Any thoughts there? Do you think that's really an argument for either or?
I mean, the longer you can stretch it out, the better it will be for the company that does it reporting wise, right? There is a reason. The reason why CoreWeave does longer than Nebius is because it looks better. Of course, when they report, accounting wise, it looks better when you can depreciate it for longer. Is it going to work with the H100s, the H200s, and all the rest? I don't know. I don't know if you look at all the other big tech companies, they've also all changed their minds over the last couple of years, right? Um, so we'll see. I mean, for Nebius, they're not gaining anything from saying we're doing it 4 years. They would be gaining if they suddenly say 6 years because it will look just much better. Maybe they will be doing that once they maybe notice, oh, actually, you know what? Seems we can still stretch it out a little bit, so we're adding another year, and it will look better when they report. But for now, also CoreWeave having way more debt than Nebius doesn't help the case here. But yeah, no, I don't see this as a bearish bull. It's just the way these companies operate at the moment. I rather see them say 4 years than 6 years, and then go from 4 to 5 than seeing 6 to 5. Because going from 6 years to 5 years is, of course, meaning that you're getting hit.
Yeah, I agree. It's so I always hear that as kind of like look, this is why Nebius is better than CoreWeave, and I never really kind of tried to sit down and I was like, I don't think it really matters too much. Obviously, like you mentioned, if you break it down over 6 years, you're taking a less hit, so it looks a little bit less loss overall. But I never saw that as a true bearish or a reason to kind of put them against each other. But it was interesting to
Nebius
hear,
is
at least
better,
from
but
CoreWeave. Yeah, yeah, exactly. But not for that reason,
yeah,
right?
exactly.
It's definitely not for that. There you can make other arguments for it, and that wouldn't be an argument that I would make for or against it.
Exactly.
But it was interesting to hear from CoreWeave that they are still renting out A100s, and they mentioned it's definitely for inference solutions right now, which I thought was pretty interesting.
Yeah, no, I mean, I guess they're doing it because then there's just too much demand, not enough supply, so they're using whatever they can. The question is,
Mhm.
what happens when you're getting your supply? Then you're probably going to get rid of the older equipment, but we'll see. We'll see what happens. I do want to touch really quick on that TerraWulf news. I remember we talked about TerraWulf when we talked about Cypher, Hut, 8, Iron as well. But quickly touching on to PayPal, of course. I have to touch on PayPal here. So one here, why are so bullish on PayPal if they are not growing new accounts, only active ones? And then someone said that Tom Lee removed PayPal from granny shots. Any comments on this? First of all, didn't know or remember that it was in granny shots. But to the other question, um, active accounts is, of course, an important metric. And active accounts is at all-time highs right now for PayPal. You might say, oh, yeah, but look, there was a time here where active accounts peaked and then it went down. Yeah, of course, it's the pandemic. Plenty of people started to use PayPal and other solutions, and then they started to churn. This is what happens when you grow at all costs. You have active accounts and then you go down. Now you might say, okay, now we're back to all-time highs, but why a number of payments transactions per account down? This is also deliberately, it's not great, but it's deliberately. This is because of them going from growth at all costs to profitable growth. So you get that impact hero scores from Braintree as well. I do expect that trend to reverse in the future. Actually, the growth trend for PayPal, in my opinion, will already be seen in the next quarter. And as we exit 2025, things will be much, much easier on a year-over-year comparisons for sure. And so there is no such thing as not growing new accounts, only active ones. If you're growing active accounts, you are also going to grow new accounts. Not always, but to me, I rather have active accounts growth than new accounts that don't transact with PayPal. Because new accounts that don't transact with PayPal means that these are accounts that you acquire, they cost you money, they don't generate money for you, which I don't like, which is exactly what we've seen previously with PayPal. You attract a lot of accounts, and then they churn, they don't transact anymore, and they're gone. Yes, the trend here looks great, but this is a
It's like
natural
YouTube viewers that don't subscribe or comment to a video. It's like, come on.
and churn after a second. And churn after a second, yeah. And then as for Tom Lee, I mean, look, everybody manages his own ETF. If he wants to remove PayPal right now, that's up to him. I'm not getting rid of my PayPal right now, right before we are going to see this thing move. Of course, here as well, it has taken a while. Alex Chris has only been in here now 2 years. I think he's been at PayPal for 2 years, and so far, so good. I'll try to show you here free cash flow. Voila. So far, so good. They're repurchasing quite a lot of shares every single quarter. Let me remove this. So this is the repurchases of common share. Free cash flow, $6-7 billion. Share repurchases around $6 billion. Actually, let's do last 12 months. That's much better. So in the meantime, they can just acquire a ton of shares. This is a company that does become more profitable. It's a company actually that does grow. I know it's quite crazy to say, but PayPal does grow. And look at this. This is the amount of share repurchase over the last, since Alex Chris came in, this thing has been increasing. If this continues, this company will, of course, become a multi-bagger just purely because there are less shares on the public market, and EPS continues to grow, revenue continues to grow, and of course, eventually, this can become a privately held company if they keep acquiring this amount of shares each and every year. And so, voila, that's my case. That's my very, very short case here for PayPal.
Two questions for you, Neil. First, would you think of doing what you did with Intel with PayPal, of maybe just selling shares and going into a long call option there? And two, when you did, just now the second part, curious on my end, when you kind of did the transformation of shares from Intel to call options, did you do where you would gain kind of the same exposure? So if you had 1,000 shares, I don't know how many shares, but if you had 1,000 shares, did you buy 10 contracts, or did you try to increase your exposure a little bit more and use more of equivalent monetary value, where you're able to buy a lot more calls, but you spend all the money on the calls themselves?
Yeah, no. So the amount of money in the I'll first answer the Intel part. The amount of money put in is less than the shares, because I wanted to free up cash, which I did, and I bought Duolingo with that cash. So I wanted to reduce the cash in the Intel position, but still have quite a lot of upside. And I already got that upside right in the last 5 days, almost doubled that position. Now going to PayPal, it definitely could be one of those options plays again, especially right now that I still believe that there is going to be a major move in the stock. The question is going to be which one I'm going to choose. Probably I'm still going to have to look at the January 27 ones, like long term, out of the money in this case. I don't know if it's going to be $100, maybe a little bit more, depending on the strike, depending on a lot of factors actually. But yeah, it could definitely be the case, especially today. Imagine if I did it a year or two ago. I don't think my options would have been performing very
That's the
well because
sucky thing. Yeah.
yeah, because the stock would not have been moving much, and so the options would probably be worth a lot less than that. And so maybe now, yeah, maybe now could be a very good opportunity to do the exact same thing. Open up cash, still have the exposure, um, and the upside, of course, as well. And especially in the short term, things can move quite quickly with options, especially if the stock suddenly starts to move, just like we've seen with Intel over the last couple of days, right? Intel went up by $4, yet my options went up by 92%. So it's definitely something I'm thinking about for sure.
And some great news here. There's some analysts that continue to maintain outperform and price target of $160 on Micron here. Wolf Research sees HBM strength, market share resilience, and Rubin Ultra demand as key long-term drivers. Uh, I was looking at some interesting news. There was an analyst that projected that SK Hynix used to have, like, I think, more than 2/3 of the total market for
Mhm.
HBM, especially for Nvidia as a customer, and that's dropping dramatically, made thanks to competition from Samsung and Micron. I do believe it's mainly thanks to Micron, but it's definitely going to be the I'm pretty excited for Micron shareholders. I don't own the stock, but definitely see a lot of bullish sentiments, especially with what the company just shared in the last investor conference.
I agree. I agree. I'm very happy with that one. We do also have for Wolf. So this was an interesting one last week, right? TerraWulf got that deal, and also that news that Google has taken what, an 8 or 9% stake in the company. And now we're seeing here that Wolf expands Fluid Stack partnership with 160 megawatt data center lease, bring the total to 360 megawatts. That's a $6.7 billion contracted revenue, $16 billion with extensions. Google will add $1.5 billion backstop, 32.5 million share warrants, and ownership of now up to 14%. And then, of course, I mean, this was bound to happen. Wolf announces a $400 million convertible notes offering due 2031 to fund capped call transactions and data center expansion. And then some other stuff has been added here. And I mean, when this happened, I was like, okay, this is getting interesting. This is getting interesting because we've been talking um, about these types of players, right? We've of course had the Applied Digital CoreWeave deal. We now have this one. I am still holding Iron, and I think Iron is a better company.
You had Course as well,
We had,
Iron,
yeah,
like you mentioned,
I mean,
Core
Corsair being
Scientific.
acquired, yeah, being
Yeah,
acquired by CoreWeave. TerraWulf is now up 13% before the market opens, and it's up 77% over the last 5 days. But yeah, do you think we're going to see this a lot more? Yeah.
I think so. And Ash, have you guys been noticing the momentum towards the Bitcoin miners, aka Iron and Cipher? Yes, Ash, and I think Neil, CoreWeave. I wouldn't say CoreWeave is a great. I think what they shared in this earnings isn't necessarily new, but it is kind of a nice eye opener. There was a kind of question, Neil, of for CoreWeave's management of what was kind of like the biggest constraint in the AI market, and CoreWeave says power shells. power shells are the biggest constraint. And for those that are not familiar what power shells are, it's exactly what all these companies are. They build a data center, they build up this infrastructure that has the power utilities ready for it. So it's pretty much that. It's a shell that is already powered, where you can just come in and throw in your GPUs, and not as easily, but in theory, just connect them, and it's like you don't have to worry about anything else. You bring in your AI racks, you roll these massive AI racks, and you turn them in. So PowerShells is what's getting pretty exciting, and that's the biggest power constraint. And if that is the biggest power constraint, I think Wolf shares exactly what's going to happen. You're going to start to see big AI companies. We've seen it with CoreWeave, with that course deal. Applied Digital, I don't know, I forget if it was OpenAI or CoreWeave as well. So both Applied Digital and Core Scientific have gotten some big deals. You see Wolf getting some big deals. I don't follow Iron too much, Neil, but I'm gonna guess that could happen as well. So yesterday, Neil, I actually did a video of 15 of these. There's at least 15 that I know in this thing. So it wasn't 15 videos. I can't look at financials for it, but it was just more like kind of breaking them down. And there were a few interesting ones. There were 5 that kind of stood out to me. I'm going to be doing a bit of a research, but I think I might just build a small ETF approach on like 5 that I like from there. Um, just because I do believe this is the biggest, and it's very similar to what Microsoft CEO said maybe like 6-7 months ago that everybody was complaining about. Microsoft CEO says that we're no longer power chip constraint, we're power constraint, and everybody thought of that as a negative thing about the chip market. It meant that there were enough chips, but that's not the case either. It's just that what's even bigger constraint than chips themselves is the power. You're not able to build these data centers fast enough. Um, Now, there is a big risk with this, right, Neil? I mean, you're going from Bitcoin miners to AI data center players. Um, that's a whole business shift. You can't just like say, you know what, I'm going from a Bitcoin miner player and going to become an AI high performance computing. A lot of these companies are going to do that. They're going to say that, but there's execution risk behind it. If you don't know how that business works and you're transforming some big data centers to something else, a lot of things could go wrong. And I think that's probably going to be one of the biggest red flags for a lot of these companies is going to be the execution risk, as they're going to try to, hey, look, I'm changing my company's name to AI. It's what we see every other day, right? I changed my company to Meta during the 2021. I changed my company name to something AI to show that I'm in it. And I think that's one of the risks with a lot of these players. But there's definitely going to be opportunities with the way the market is.
Any names that popped out for you?
For me, I have a list, and again, it's more just based on the top level overview. So I still have to do, but to me, Neil, Cypher was definitely one that popped out. BT is another ticker. Bitfarms is another one. Uh, CLSK. There's a new IPO, Wi-Fi, White Fiber, Applied Digital, and Mara. So I had about 7. 1, 2, 3, 4, 5, 6, 7. Yeah, so 7. We already own Applied Digital. The other 6 are ones that I don't know. I might kind of go with you and do that. Buy some now, invest later. But those are the ones that really caught my attention out of the 15. I did it. I did Jose Law. The list was released
In the video yesterday.
last night. I did it super late, so a lot of people missed it. But the list is out.
Okay, you should add Iron to the list. I do think
Yeah.
it is the best of the
Of
rest.
them still.
It's
The other
still
ones, the other thing is the
cost-wise.
other ones didn't see a massive jump just yet. So those were the ones that found interesting without a massive jump just yet in stock price.
Okay.
I do believe I have Iron in the video, but that was the only reason I didn't just put it on my true watch list. And the other thing is, I think Iron gets already some cover. These other ones haven't gotten any cover, so it's not like I could even watch any videos on them. Where I know I can go here and watch you speak on it and kind of get a little more familiar with it.
Okay, fair enough. I mean, I think the reason why it got attention is because, well, first of all, if we look at the jumps here, July to June, just month over month, we see, first of all, hardware profit margin 76%, hardware profit 63.3%. Of course, the AI cloud services part is still very, very small, but I do expect that to grow considerably over the next couple of years. The amount of Bitcoins that they've mined, the increase here just month over month, so over 100 extra Bitcoins, and the cost to mine has barely increased. Their margins, in my opinion, is just the best of the rest, even better than the pure plays, like the Maras and the Clean Sparks and all of that. I do think that they've got the best cost structure here. They've also, well, we talked about that, right? They've expanded their Nvidia um, offerings. Of course, they still need to be delivered and put into place and all of that. But they're also having, let me pull this up. Let me zoom in a little bit. This is basically what they will, well, what's offered right now. Operating is 810 megawatts. Then under construction or power secured is 2.1 gigawatts. And then they've got another extra
Very
gigawatt
nice. Yeah.
in development pipeline. And this is what you need to get the deals, like the multiple billions of dollars in deals. This is what you need. And I do think they're in a very, very good place. And of course, as long as the price of Bitcoin remains extremely high, they'll just generate a ton of cash from the Bitcoin mining business, and they use that cash to buy whatever they need. If they need more GPUs, they'll buy more GPUs. If they need more land, they'll buy more land. Although right now, I do think that land is not an issue for them, just time and construction. And so I do think that Iron, yes, despite the stock being up, I don't even know where we are right now, probably 19 or something, maybe even more. No, yeah, $19. Year to date, it's up 88% and up 250% since April. But then again, everything's up since April with those types of names. But yeah, it's definitely an interesting one. Cypher was another one that I was also looking at pretty
Yeah,
close.
if the one that really caught my attention, Neo, if there were two out of the list that maybe I would say take a closer look at, is BT. I think it's Bit Digital. Let me see. Let me just make sure. Yeah, Bit Digital. The reason that one caught my attention is one. Some of these, like I mentioned, is an execution risk, right? It's you can't just easily transform. And what I'm seeing, two or three of them, what they did is they actually made recent acquisitions of companies that kind of focus in the data center space. So now it's like, okay, I don't have to worry that you as a company itself know what to do. You're acquiring this talent to make sure that they're able to help you out, kind of transform into that direction the right way. So that's kind of like I mentioned. I think execution risk is going to be the biggest hurdle for a lot of these players, and it's going to create where some of these might actually end up with a bad business because they just don't understand the concept behind it. Bit Digital was one that I really found exciting because they do have that acquisition of White Fiber. They owned about 75% of this company, which again just turned public like a week ago, and is focusing on AI infrastructure. The other thing is they're one of the few players that also focuses on things like Ethereum staking, and I know that's kind of gotten a lot of popular name behind it, or a lot of popularity. So it's kind of just these are more of like those trend-setting stocks at the moment, right? That momentum style play. So that one, and I did see that Mara Holdings. I think it's very popular, but very similar. It's done an acquisition. I think it was that one. I have to double check. I have to rewatch my video. But yes, it's them. They actually just get, and they did an agreement to kind of get expand into this, own 64% stake in this company called Exion, and Exion is one that is operating high performance computing data centers. So in that space, that's what I would like to see, a way to kind of maybe eliminate a little bit of that execution risk by either acquiring some talent, making some acquisitions in that space. So maybe those are the two that if out of the 15, I would say, if one is curious to start off the learning process. It's not a recommendation or anything because there's still so much to do. But from a top level overview, those are two that really, really got my attention.
Fair enough. For those that missed the video, go watch it after the live stream. Thank you to Abby for the super chat here. Figma at 100, a DCA hold, DCA or hold and sell at positive your price target. Let's actually check.
So sorry. My apologies for changing that, Neil. That this one just had me laughing.
uh, Jose is always running late, and Neil is a Chelsea fan. I mean, nobody's perfect, right? Unless you're me. um, although Chelsea didn't really win yesterday, it was yeah, a shame. But Figma. Figma is at under $80 right now. Abi bought it at 100, I guess. I mean, it's a very successful IPO for sure. It's one. It's a company we touched on a little bit when it went public. Before it went public, actually, it's just that hype, IPO hype that it had made zero sense to me. That it was trading at such a high valuation. It did come down, but I do think it can come down more. Although I never know what the market will do. But yeah, compare this to an Adobe. I know Adobe is not growing as fast as a Figma, but still, Figma is here closer to $38 billion in market cap, generating $820 million, growing, I think, 40+%. It's a premium. It's a premium, and I don't want to pay that premium right now.
Sorry, Neil was typing here. Yeah, I have no thoughts here, Neil, on Figma. Crazy how it's pulled down at the crazy run up, but I think there was even another IPO that also kind of did something similar. I don't know if last week we saw an IPO that ran up and then put. What did we? There was a popular IPO last week.
What is it? Bullish?
Oh yeah, was it bullish? Yeah, it was bullish. What do they do? Is it a financial company?
I don't know. They're bullish.
That is wild. But I thought it ran up to like $100.
Yeah, it doesn't show us
Maybe
here
not.
the intraday, but yeah.
But it did, right? It did, right?
Yeah, yeah, yeah.
It ran pretty high on the day and then kind of pulled down.
Yeah, I don't know what they do. I don't know. I don't know
Wow.
what they do.
Neil, I actually have there was an interesting question here when we were, if we can go back to these power shells. I think Manuel, well, a lot of these companies are going to say this, power secure, they're power secure on this. But what does that actually mean? Will the energy company promise they will get hooked up, or that the lines and transformers are actually already built? And I think that's going to be the interesting part about this. I think every company is going to maybe use a different definition for something. And that's where you're going to have to, I guess, look at the transcript and try to understand which one is which. My best, when I would say power secure, at minimum, it means that they have at least the licenses and everything approved. So even if the work isn't done, theoretically, it has no hurdles for it being accomplished. So that's what I would assume power secured is. Anything below that, in my opinion, would be a false advertisement. Where if you still need to get the licenses, but to me, at least getting all the licenses and all the approvals ready, that is what I would consider power secure. But I guess I hope every analyst during these questions, during the Q&A sessions, they ask this question.
Yeah, and I think that's why maybe there is a differentiator here when they say operating under construction power secure and then development pipeline. Under construction power secured probably means I would assume that it probably means that you're getting your power when you're ready to get your power, other than and not say, oh, power secured, but we might not get it. That wouldn't make any sense. So
All right, yeah, let's
I
see.
assume it's the permits.
Yeah, I would. That's where, if I was an investor in this, that was an issue, that would be my my minimum. Be like, if you're saying approve, it means at least permits are good to go. I mean, secure, at least permits are approved.
Yeah, I agree. TB here with the super chat. Thank you very much. Thoughts on Rezolve AI? Would this be a good short term? Have you heard about Rezolve AI?
Just looking into them right now. I'm not familiar. But anything that has an to me, anything that has an AI on its name already screams a red flag to me. Um, it's like if you're that good, you don't need to.
So they provide AI solutions for commerce. Its platform empowers retailers, brand, and manufacturers to create dynamic connections with consumers, transcending barriers of location and device. This company worth $750 million, generating $157,000. Jose,
Well,
don't we generate more?
um, it seems like they're pushing some of the recent press release. They're talking a little bit about kind of like Bitcoin, about stable coins. Um, so I wonder if they're trying to be in that world.
I don't know. It's not much information here on this company, and it's
Mm,
strange one.
yeah.
Strange one. Rezolve AI. Yeah, anyone that does this, because I would assume that this was not their name before.
Mm-hmm.
Because you went public here apparently. Wait, yeah, 2021. Were you already Resolve AI in 2021?
They have
I don't know.
strategic partnerships and initiatives with Microsoft, Google, and Tether.
Yeah, that doesn't mean much.
Yeah, I can have a partnership with Microsoft. I buy a lot of Open 365 and stuff like that. Great partnership
Exactly.
with Google with my Gemini solutions.
Uh,
It seems what they're doing, Neil, is they're trying to become the search to. It seems like a chatbot um, solution for the e-commerce world. So you know how SoundHound is like that voice for ordering. It seems that this wants to become like the chatbot style for the commerce world, where that's all they're going to be focusing on. Which I don't. It seems. I think you talked about it in the past. It seems more like a. Oh, you have the website here. I was looking.
mhm.
It seems more like a open GPT application opposed to an actual business. I forget what the actual saying.
GPT wrapper.
Yeah.
But yeah, I don't know. I don't know what I feel, what I think about this. Because again, it's cool and all, but it's also something that everyone else can do today.
Mm-hmm.
Like a Shopify can do this. Shopify does
Yeah.
this probably.
Yeah.
PayPal will do this as well with Perplexity. So yeah, cool, but no. Cool, but no is my thing here.
Let's
Um,
see.
you guys promote fiscal AI. You don't
Not as
say.
a stock. Not as a. It's time to buy and get into the valuation of this company.
Yeah, fiscal.ai. Previously,
Yeah.
FinChat. Um,
FinChat. Yeah. And previously, I think it was something else too.
I think so. Yeah. Um, let's see. Did have something else to show? Oh yeah, of course. We have a Google note here. BMO Capital
Oh, they
reiterates
actually do
outperform.
something.
Yeah, apparently search and
Yeah.
whatnot. Maintains price target to $225. The analyst does warn DOJ remedies phase could trigger plus minus 10% shared move, which means yeah, the decision is probably going to happen in the next 2 weeks
Mm-hmm.
for Google, and that could trigger a move in the stock price. Again, I'd be very surprised if they have to sell anything.
Oh yeah, 100%. And then if they do, what I don't know. I don't know.
Like, did you see the Perplexity thing bid?
Yeah. Oh
Like,
yeah, I forget, Neil. Man, you've been gone for a while.
I know.
Why do you think they did that? No one's taking the bid serious, right? Am I right to think that no one's taking this bid serious? If no one's taking the bid serious, and I don't think it's like a promotional move where like, oh, did you hear about this company? Maybe I should go use Perplexity. So I
Mm.
don't think it's anything driving new users. Why do you think that came out? Do you think it has something to do with this core, and it's like saying, "Oh, look, there's actually buyers that would willing to buy if we split you up right now." Do you think there's some thought process behind there?
I mean, first of all, Perplexity offering like double.
Thank you, Jose.
Uh, thank you very much. Although it's already up. Perplexity offering double what they're worth to buy Chrome, a company that is probably essentially worthless without Google, is is very funny to me, right? Because Chrome is a browser. Chrome without Google behind it is worthless.
Yeah.
So I don't. I also don't understand.
So what did you buy when you buy Chrome? Just
No, that's the thing. I don't understand what's the point of Perplexity buying Chrome, since Perplexity has their own browser now. And if you have your own browser, why would you buy a competing browser and still make Google the standard search in that browser? This whole thing did not make any sense to me. Um, didn't make any sense to me. By the way, I do have Perplexity Comet. Um, it's it's cool,
I
but
opened it once too, Neil. I have after trying it once, I don't know. I haven't had the need to open it again.
yeah, again,
You
like
used it more than once.
no, I used it yesterday. Um, like it's cool to have the assistant and all of that, but
Hmm.
other than that, why would I? First of all, everything is connected to my Google account, anyways, in Perplexity. Like when it says sign in, it's like sign in uses Google or using your Apple account, and I'm like, that's a funny one. Um, but yeah, I don't know. That when this came out, this was very very weird. Like $35 billion. Again, it could also be something good for Google. And basically, Google would say, "Look, Perplexity is alive and well. We're also alive. The other folks are also alive. So leave us alone." Plus, Perplexity comment is built on Chromium. Microsoft Edge is built on Chromium as well. I don't know. It just this whole thing just doesn't make much sense. It's also very very CCP like. Pardon my French, but it's like Google spent so much money building Chrome and the whole ecosystem, and now you're going to say, no, actually, uh, you will have to sell it to someone. It's
Yeah,
not a company that they bought.
I
It's
do think
something
that's
they
the
built.
weird part. Yeah, it's so weird when it's like I understand the monopoly through acquisitions, but a monopoly through you just kicking ass the whole time is different. Um, but I don't know. I don't know. I mean, I guess there's a lot of ways to see that where it also depends on how you got there. If there's like history of you doing shady ways of making sure you're the only top player and that led to the thing, then that could be a consider, I guess, a reason to look, you didn't do it the right way. So we're just going to break it up. But it seems like you're getting punished for being the best. As long
Yeah,
as you did it the right way, I don't think that should be punished.
yeah, and I mean that's you could say, yeah, but look at the deals that they made with Samsung and Apple. I'm like, okay, but it's not like it was free. Like they paid $20 billion to
Yeah.
Apple. Apple said yes, and so maybe punish Apple. I don't know, but um, it's like, yeah, they made a deal just like every other company has deals in place, but it's not like deals that are free. It cost them a hell of a lot of money to be the standard search. It's not like Apple said, oh, you know what, we're so nice to you. You can be the standard search
Yeah.
for free. No, they
Yeah.
said 20 billion.
No, but that's the thing. I feel like something like that would be negative away, right, Neil? Because it's like not many companies can pay that 20 billion to do that. So it's like you use your strength there to become that monopoly. So I could see that being kind of like an argument against it, where it's like if a smaller player didn't have $20 billion, they had no chance of ever becoming this part of thing. But I think that's more like also Apple kind of taking the bribe. I don't know who's the right and the wrong, but something
I
like that,
mean,
I would say kind of it shows that a little bit of a negative strength that you need to add that financial strength to become to buy yourself into certain positions.
Yes and no, because if there were other options, it would have popped up already, right? It's not like
Yeah,
Microsoft doesn't own a browser. Microsoft has the money.
yeah,
They have
yeah,
the money. The product just sucks. Apple has Safari. Okay,
yeah.
you use Safari, you can use whatever search engine you want, but there are other options out there. It's just that Chrome is the best one. I mean, they for
I'm pretty sure
sure
they do. Yeah, that's
they
what
for
they're for
sure
sure
use
gonna
it.
do.
Maybe some still Internet Explorer. Maybe
Yeah.
some. the the dinosaurs
I,
in
I wonder if that's a question. Like not too familiar with the how this ruling goes. If there's like typical citizen juries as well, and but I wonder if that's one of the questions: do you use Chrome browsers or not? And if they need to have a nice mix all around. But
correct. Microsoft Internet Explorer used to have an even
mhm.
bigger percentage, of course, because Chrome didn't exist.
Yeah.
Right? Everybody was
Hmm.
basically on Microsoft Internet Explorer. Chrome came in, it was just the better product, and Internet Explorer died.
That's the real question, Russell. Why is there is there a monopoly on the Monopoly Commission? That should be checked out.
Yeah, it's should be checked out. Should definitely be checked out. There was wait, um, mm, mm, mm. Yeah, at this point, um, if they can, but they cannot. How can you prove that you created a monopoly by getting everyone to use Chrome? You cannot prove it. The rise of Chrome happened because Chrome is just a better product. Then, of course, the fact that it's part of the Google ecosystem and all of that, yes, then it has grown. But then again, you can say that Apple's whole ecosystem is also a monopoly.
Hmm.
Like products that are not Apple will not work well within the Apple ecosystem.
Hmm.
Why?
Something that Meta guys likes to fight. Mark would fight. That dude would probably put so much money to make sure something like that.
Did you see the report or the rumor that came out that said that the Meta smart glasses are going to come out are going to be announced later this year? 800 to $1,000 with a screen and a wristband.
Man, that would be awesome. I think Meta is one of the few companies that I don't. That's besides WhatsApp. I don't use much of their platforms. But if they do release that before Google, maybe I might jump into that Meta wagon. But I'm curious to see what Google announces. Right, we kind of saw a little
Mhm.
bit tease in the I/O event. I know we have kind of that consumer product event. I don't know if is it in September, Neil, or is it
The Meta
Google?
or
Google, I
Google?
think.
Google
Yeah,
has
because they're
an
going to
event
release the Pixel soon.
two
They're going
days
to release
from
the
now.
Pixel 2 days from now.
Yeah.
Huh, I wonder if they're going to talk about it a little bit. Do you think they're going to talk about their smart glasses there?
No, I think it's purely Pixel. Pixel and maybe smartwatch. Maybe there's a tablet. I don't know, but it's purely Pixel. It's my next phone. So business expense.
I agree. Neil, we keep seeing on chat that AMD is down a bit. Is it really down, or is it just?
Like 0.7.
Uh,
It's down. Yeah, 0.8. It's down 0.8. It's like last week where streaming is like AMD is crashing. I checked 1.2%. Like, okay, thank you.
Massive crash. I wonder what a real crash would do.
I do quickly want to touch on here
Yeah.
as well switch in sentiment towards energy stocks. I talked about Enphase in yesterday's video. First Solar is another one. I always say that First Solar is probably a better pick in the energy side because it's not as affected by high rates as an Enphase. But there was a small change on August 15, which is still not great. It's just that it was better than feared with regards to the energy sector, tariffs, incentives, write-downs and all of that. Since then, on Friday, we've seen First Solar, Enphase, Sunrun, some of the other energy players go up quite significantly. This is another potential options play for those that are interested. I think Enphase options for January 27 can be very attractive. And now we're seeing UBS come out with First Solar being its top pick for this whole reason right here. I think I've seen another analyst come out with a note with regards to Run as well. So sentiment around here, RBC Capital, sentiment around these types of names can now change as we get more clarification about the one big beautiful bill or the exact changes that could affect a specific sector. Suddenly it's better than feared, and then you will be seeing these these stocks have crashed, right? These stocks are down significantly. Once the momentum shifts, I think things can move rapidly in the other direction. Right now, let's see, Enphase is up 2.7% pre-market. It did see a nice bump already on, I think Friday it was up 14% or so. So sentiment in these types of stocks can be very important if you want to trade or just do options. Yeah, the removing Sora benefits before stop, I agree. It's a stupid move, especially doing it very, very quickly like that. It's a stupid move. Yeah.
Let's see, what else do we have? Do we have any earnings? Any good earnings this week? It was going to be a quiet one.
We have Palo Alto later today. Let me actually pull up the earnings calendar. We have Palo Alto later today. Then we've got the big Home Depot, Target, and Walmart. Other than that, Zoom, Workday, Intuit, the best ticker in the market on Friday.
I'll be right back.
That, no problem. Other than that, nothing that interesting. For those, I mean, Target, Estee Lauder, Wednesday before the market opens. Viking, that's the cruise line, expensive cruise lines, Tuesday before the market opens. Armor Sports, also Tuesday before the market opens here. As for the question, I don't use leverage at all, just plain call options. That's about it. That's the $1 million question. When will the market understand PayPal is undervalued? That's the $1 million question. Probably once it sees, because the market will always chase. So probably once it sees growth maybe accelerate, which I do expect to see already. Q3, we're going to see some good guidance as well. So probably then. I am checking some of the options here as well. January 2027. This is the last price. Since it's January 2027, I wouldn't even mind picking 110 or 115 or $120. It's not that expensive. We do have some implied volatility, some interest and all of that. So 120, what is it? 1.5 years from now for PayPal. It's less than a double from here. Definitely feasible. Gives me time, gives PayPal time, gives Wall Street time to react. I think it's possible. I probably won't liquidate my position to buy on options only. I probably will still want to hold shares. But having definitely maybe part of it in call options could definitely help the portfolio out, and maybe help with liquidity as well along the way. Because if it does start to move after Q3, exiting 2025, I do think we can hit $100, and of course these options will be worth already significantly more than my shares. So yeah, it's something I'll investigate further for sure. I'm not a professional in options at all. Buying Intel call options was the first time I actually bought call options ever. I usually only do shares. So yeah, no courses or anything coming from me. Whoever wants to help me can help me in the chat. I'm all ears. Call options are cheaper if you factor in daily hold expenses from work. I agree. If you hold a leveraged stock to form, I agree. I agree. Which, I mean, leverage, I don't touch it. Baba earnings, I don't know. I don't know when Alibaba will report, because I've checked it. Some websites said last week, but it didn't happen, obviously. So I assume it's either this week or next week. No, it's it's next week. It's August 29th. Apologies for that. August 29th, Alibaba will report. So yeah, next week on Friday. Huh. That's strange, but okay. Alibaba report next week on Friday. Where is Jose? Probably with his kid. He's coming back. He's coming back though. I sold my stock and bought $130 January. That's probably, yeah, probably also a good option. Sell puts. Yeah. I mean, selling puts would be if I wanted to buy a company at a better price. I have shares here. I'm very happy with my cost, my averaging on PayPal, which is, I will tell you right now. So I'm not looking to buy extra shares here, just looking to get maybe more upside or the same upside with less capital at risk or locked. And maybe locked is a better term to use. Let's see the average for PayPal. I think it's in the low 60s, maybe high 50s. Let's see. PayPal, $61 is the average cost for me. So yeah, I don't need to sell puts in that. In other companies that I want to have a better price, for sure. What else? Let's actually look at what the market is doing before the market opens. I think Europe is red at the moment. Correct. Europe is, well, red. It's very scary to see the red, but when you see it's like the FTSE is 0.05%, DAX 0.25. It's not the end of the world. Asia is, I'd say, more green than the Europe red for sure. US pre-market flat. This is basically flat to me. The 10-year sits at 4.31% and euro dollars 116. 116 euro dollars. Thoughts on Novo Nordisk? Novo is probably up today already in Europe. Yeah, up 4 to 5%. As I said, even under $50, I think Novo is undervalued. I don't think we're going to see a V-shaped recovery, but it's undervalued for sure. Globant, actually, I did have a look at Globant last week in private. Although it was interesting, let me actually pull this up. Although it was interesting, and if you watch F1, you probably see Globant sometimes pop up on the site. As you can see right here, it's currently experiencing, maybe that's a bit too much, 71% drawdown over the past 12 months. company worth just under $3 billion, generating $2.4 billion over the last 12 months. Margin wise, okay, not great. It's the thing is not expected to grow that much anymore. PE is very low, price target very high, average analyst price target compared to where we're at right now. Yeah, I guess I looked at this. I looked at Accenture as well, another consulting firm. Interesting just because it is down so much. Question is, can it rebound business wise? Look, Q2 revenue, basically no growth year over year. So it did grow very fast before. It's not expected to grow much this year, but then we should be expecting an acceleration in growth, but again, not by much over the next 2 fiscal years. So do I need this? Probably not, right? Probably not. Yeah, no, of course. I mean, if I wasn't clear, the reason why I never did or usually never do options is because of this. It is not a sure bet and a no-brainer. Holding shares, yeah, the only way you lose 100% of your capital in just pure shares only is if the stock goes to zero. That's you are 100% correct, 100% correct. Which is why I also, if I do go from shares to options, I put less money in the options than what I had with my share position. Right, I'm putting less capital at risk because I know that the upside could be much bigger than with my shares only, but I also know the downside risks here as well, which is exactly what I did with Intel. Right, Intel was a position worth, what was it, 16, 18,000. I put 10,000 into options, and the rest went into me buying Duolingo shares. Captain Harris here asks, if you have an X amount to invest, why buy a new stock and not grow? I agree. This is a very good question. And I guess it depends on, if I see a company that I really like. I'll give the example again. Let's maybe have a look. I'll give the example again with the local Duolingo, almost the same ticker. But Duolingo is a stock in the company that I liked for a long time. I'm a user as well. And yeah, you could say, oh, but you had free cash. Why not put it either in the cash position or add to an existing stock? Now, the luxury that I have is that I have cash on the side still, and I'm allowed to buy a new company, which is Duolingo, because the stock did go down, did go up after earnings, but did crash. I bought, went down even more. I bought even more, and now my average is, I think, still 350 or something like that, 345, 350. So I'm still down on that new position. But to me, it's important to, again, invest in companies that I like. I like Duolingo. I like the price that I paid for it. And so I bought shares. Could I get the same upside still from other companies that I own? Yes. But again, for me, I like this company. I wanted to get an entry point, a good entry, and so I bought it. That's not to say that I will never add to existing positions. As you've seen, I added to Nebius the day after the earnings report, or actually the day of the earnings report, when the stock was already up. I added to dLocal not so long ago. I added to SoFi also not that long ago. I added to Google, PayPal, will be adding to Rocket Lab as well. So I keep adding to existing positions as well. But if I see a great company trading at a good price that I don't own and I want to own, I will buy it. I will buy it. This is, I don't know what the markets will do. If you plan on holding this for a long, long time, like myself, open and dollar cost average or average up. This is one of the companies where I'm averaging up. I have zero problems with that. My average is $28. I bought at $66. Um, I will be buying more if the markets allows me to buy more when I feel like buying. So to me, this is a big winner. I think this is going to be a huge winner for my portfolio, um, and so I have no issues adding and averaging up. Roberto, yes, we're back. You're back as well. You're back as well. Um, I did lose here a comment. Where is it? Here. Investing idea. I worked at Accenture for 4 years. Business model is garbage, and I will not invest. They rather fire a top high salaried worker and hire cheap Indian IT specialists who are bottom of the barrel. I mean, it's going to be interesting to see what they do in the age of AI, right? Because they can just replace with AI agents. Less cost for them, less overhead. So we'll see. But yeah, there is definitely a reason why these companies have come down for sure over the past couple of months. Also the cuts and all of that. Have you heard rumor Deep L preparing for an IPO? I did not. Let's see if we can find something. DeepL. I see here from April something pop up, but that's about it. They would be profitable if they weren't sponsors of F1. I mean, that's the trade-off, right? You sponsor F1, you get the eyes, you get maybe some traction, or you don't sponsor and you might be profitable. Can do both if you're like Salesforce, for example. Is my background my dream place? Not at all. My dream place is somewhere near a lake in nature and where everybody leaves me alone. That's my dream place. Somewhere in Montana, maybe, when I can have a ranch or something. That would be the dream scenario. Maybe one day. Do I accept money so I can manage it? Not yet. Maybe in 2026 there might be something in the works, but at the moment, no. And Jose is back. People were
Yeah,
asking,
I'm back.
where did he go? Did you fire him?
My real boss, the little one, needed me for a bit.
Fair enough. Montana is a very nice place. Let's see. Markets are opening up in 6 minutes.
Any good questions I missed, Neil? Anything good happened? Money sucks. Don't do it, Neil.
I mean, I manage my own money, so if I can make even more money by managing other people's money, why not? Montana could be a couple of years earlier than expected.
Were you planning on going to Montana?
Now, someone asked if my background is my dream place. I said my dream place is probably somewhere like Montana, in a ranch where I have like a huge space for myself. People can leave me alone, and voila, and I chill. Yellow Couch National Park. Not bad, actually. Not bad.
All right.
Markets are mixed overall. Europe is flat, reddish. Asia is green. Pre-market US, it's red, but it's flat.
Pretty much flat. Yeah, pretty much flat
red,
here.
But it's flat.
Which was weird. Wasn't earlier today a little bit more bullish? I thought a few stocks were green.
A few stocks are green.
Yeah.
Actually, I do wonder what my open. Ooh, my open door is opening the door for my ranch to be bought, maybe on open door in the future.
You can buy open.
CEO stepped down, so
That's good.
it's good because she was not a good CEO. She
Uh,
was the previous CFO, and of course, when you look at the stock, yeah, not much has happened. Although a lot of damage was done by the previous
I feel like
management,
that's always for any tech company. Seeing the CFO become CEO never ends up being well.
especially not if it's a tech company. Then you don't need a financial
Yeah.
person. You need a tech
Mhm.
person.
Yeah.
Um,
It's
but yeah, this is crazy, man. Since I bought this thing has gone up. Well, it did go up almost 5%, 5x. I took my initial investment out at 3 something, and now the rest is still up 3.4x. Very nice, very nice. Neil wants to
we
become the
have.
next John Dodonov in investing. I mean, I hope I don't end like him, but along the way, yeah, why not? Why not?
um, let's see here. Russell, hey Jose, what do you think about Morgan Stanley being unprofitable? Look biased to me or anti AMD? Oh, okay. So I guess this is talking about the earlier chart that we
Hmm.
talked about. Um, I don't think. Again, we talked a little bit about it in today's episode, where it was really focused on building massive AI factories. That's where kind of that those prots, those data points were really kind of focusing on 100 megawatt AI data centers, and maybe I don't know if Morgan Stanley has an angle that they wanted to play it with that direction, and maybe that could be seen as bearish for AMD. Um, but I think there's a lot of different ways to play with the AI accelerator market. AMD is definitely not there for building massive AI data centers just yet, but that's where the MI 400 is going to come out. And thank you. Neil, I was out in vacation. Small, I take random small trips with the little one, the wives, and my 2 videos ago, my wife and my kid were sleeping, so I did the video in the bathroom. Um, so luckily, with the gear and the AI, you can pop up this background anywhere. So it looked like I was just in my office, and I usually just take my some of my equipment with me. So it makes it easy to make videos wherever I'm at. Um, then another comment here from
The
Roberto before the
bathroom
market
he
opens.
investor.
Do you think the additional quarter 2 capex spend that did not show up in other semi earnings will make Nvidia pop, or is it priced? And this is the crazy. This is obviously the $1 million question, Roberto. I see it already in there, but I don't. That doesn't mean the market sees it in there. And there was some massive growth in capex. I think we've talked about it in the past, and no one is seeing that report growth. I think it's going to be Nvidia that sees that growth. Is the market going to pop? I don't know, Roberto. But what I do know is it does kind of create that still evidence that the long-term bullish thesis is still pretty much there for Nvidia. And then all of these increase that capital expenditure growth rates for this year, and expect even more numerical growth for next year. Just kind of gives that overall bullish trend still for the AI space. And the market is open, but we'll wait. Pull up trading view. I don't know why you're always here.
I am on TradingView.
Oh, I mean, pull up your watch list.
It's open. Oh, Intel is down. My options. My option. Let's see.
Applied
Um,
Digital up 8.9% in the $15.
very nice, Roberto. Where you're at?
Roberto, see, Roberto
Here
told
he
me to
is.
stay.
Bathroom at the Four Seasons. That's where he's at. Bathroom at the Four Seasons. Not bad.
Uh,
Not
I'm trying
bad.
to get top status on Hyatt, so the wife and I are just making random Hyatt vacation trips over the weekend to get top tier status there.
What do you get?
Um, Well, it's really good when you do like trips to like um, a lot of suite upgrades. You get a lot of fees reduction, um, like free breakfast, great point setup, and some of the places that we go, there's always like extra fees, and just getting that status will save us a lot and a lot of money.
You have like a special Hyatt card, or you pay with
Yeah, yeah, I
American?
have a higher credit card and all that. Both my
Okay.
business and my personal are higher cards to build
Nice.
points even faster.
So Apply Digital up almost 12%.
Yeah, what's going on here?
There was something. Let me
It has to be.
no, because I did see something pop up, and then
Damn, I want to see if the other stocks popped up too. Hopefully
uh,
not. Okay, no.
so Apply
Wolf is
Digital
still up 15.
announced
Cypher up 5.
they will break ground on a new $3 billion data center in North Dakota, expanding Forge 1 campus with a new Forge 2. Um, I guess this is good because this might mean that they um, could maybe get even more contracts
Yeah.
other than the CoreWeave one.
Yeah. Or CoreWeave is just going to come out and say, hey, look, we're actually taking that too.
Yeah, because they
Yeah.
did expand it. I think last time we
Yeah.
checked. Other than that, Duolingo up 5.5. Very nice.
Nice.
Novo Nordisk is up.
Your
Someone in
UNH is
that
doing good right after
after Warren,
yeah.
David Tepper, and Michael Burry all followed the
Curious what
top investors.
CoreWeave is doing.
What is
You
Nebius
know, right?
doing? Flat.
Now the arbitrary trade is better on CoreWeave than on Course. Either the market doesn't believe the deal's gonna do that anymore, because there was I don't know if you noticed, if you've heard, Neil, core scientific investors are obviously not happy,
Mm-hmm.
and there's some pressure there. But now if you kind of do the reverse math, it's actually cheaper to buy CoreWeave than Course.
Huh. Interesting.
Are we gonna get 16 here on Applied Digital?
Yes, we
16.
have.
Are we gonna get 100 here on Applied Digital?
Then we don't even need the Hyatt program anymore. We
Yeah,
just
yeah.
buy the hotel. We just buy the hotel.
Oh man.
Apparently, people agree with you that Hyatt is the best hotel program out there.
100%. 100%.
Um,
Yeah, I have the I don't like their point system
Amex
for
or
Marriott.
the
Yeah,
ah,
Marriott in
mm.
general, which I think is that the Bonvoy. I do have the platinum card for Marriott, but I don't. I'm sticking to Hyatt, and their hotels are amazing, in my opinion.
I mean, what annoys me is that we need to get so many cards for different. Like, can you not just work with one guy and that's it?
And that's it.
Okay, Novo Nordisk is up 3.8. Seems a small revival here in this stock. United Health up a little bit more after, of course, the super investors bought. Micron is up a little bit.
Micron's nice.
Let me put the daily here. Trade Desk is reviving a little bit after that
Yeah.
huge crash.
Marvell's been doing really good lately too. I see it up there in the green.
Marvel, yeah, holding up.
Just nice uptrend. Yeah, really
Yeah,
good. Slowly but surely.
exactly. Unlike this one, still under 70. Like, doesn't want to go back
This
up.
one's consistently does what it does.
Yeah, exactly. This one is consistently going up.
This one's wild. I mean, it's definitely. I understand it, right? This was an undervalued beast, and it's still, I think. I mean, compared to the rest of the market,
Yeah.
but it's crazy how quick. I didn't think it was going to happen this quick. That dropped from 140 to back to 200.
Yeah. I mean, the only reason it's not at all-time highs is because of that DOJ case decision.
How is Amazon doing, Neil? I know I haven't followed it much after earnings. It did
It
that dip.
dropped
Oh
and
wow,
then it
came
recovered.
back. Nice.
Yeah. SoFi doing very well, still holding up $23. Zeta is flat right now, but also doing very well. Iron is down 0.7 today. Uber, I still think this can make its way to $100 this year.
Hmm.
Wouldn't be surprised. Nebius is at 70. New Holdings did jump, I think 10% or so after it reported earnings last week. Very good quarter yet again. We're back here at $13. Robinhood, 113. Intel now down 4%, 4.3%. So that shouldn't be great for the options, but okay. Meta down 2.9. Interesting. Any news meta-wise?
Meta-wise, I haven't seen, but Roberto, appreciate that. The super chat there, pretty good. Thank you, thank you, thank you.
For the CoreWeave put idea premium was great. Let's see CoreWeave actually.
Yeah, it doesn't seem like many insiders sold off too
Sold?
much. Yeah, but I mean, right? It doesn't mean it, especially with IPO expiration. This opening
Lockup.
lockup period. Thank you, Neil. I lost. It's I wonder if there's ever a moment when they all sell at one time, right? It just opens the door. So sometimes, I'll sell this week, I'll sell next week, I'll sell next month. It just opens up the wall for it. But at least for the initial step, it seems like maybe the market was expecting more selling, and uh, nothing too crazy seems to be happening for them. So
I mean, it is
right now,
down
yeah,
31% in just a couple of days.
I'm still liking the put idea for this, which what Roberto just mentioned is just selling some puts here, especially if you don't mind owning it. I think at $100, this one isn't the worst thing. So I saw some nice premium there on puts. Open plus 10%. Nice.
Very nice. Oscar down. Oscar down.
All right, time to end
1.2%.
the episode.
We follow the trend. We follow the trend here. It does seem like we are fading a little bit, but not by much.
Yeah.
But overall, can't complain.
Reddit is killing it. That's wild. 250.
Wow. Wow, this thing has gone up very, very fast. Like, I mean, the
Nice.
recovery here was nice, but this after the earnings was crazy.
No.
This thing went up 55%. Not bad.
Yeah.
What is Wolf?
Eddie's here. Wondering what price would you sell applied at Neo? He's up
I don't know.
200%, thinking of dumping. I mean,
What do we
200%
want?
is nice. I might this time for real, Roberto. I'm gonna say it. I might sell small position of the applied, not the whole position, but it's to build that ETF that I was talking about earlier. It's kind of the ETF, a little ETF of all those different PowerShell companies. Applied Digital is gonna stay in that ETF, but I might sell a bit to fund some of the other players in there.
Wolf was up 10%. Cypher is up 5. Hut 8 up, no, down. What was the other one? BTB.
Yeah, there's BTBT and BT and BitF. This one's
Oh,
on, and all of these, what was surprising to me is they were at least most of them were over $1 billion in market cap. This is the one I like the most, I think. Yeah, BitF.
interesting.
But
Didn't move much actually.
no.
Even though Wolf is up. Wolf is up a lot and Applied Digital is up.
Cole's wondering which ETF. Cole, I mentioned earlier in this episode, I did a quick video of, it's just a video of a top level. It's not a buy or sell or anything. It's just companies that are kind of creating what is known as power shells, or kind of like AI infrastructure, the infrastructure itself, like making sure the power is there, making sure the space is available for companies to come and roll in their data centers. So there's about 15 companies that I saw. Within those 15, I like on a top basis right now, like 5 or 6. I want to create like a little ETF approach about it. Yeah.
Last thing here, maybe question about Zeta from Vitom. I like it. I touched on it the first time here at $12, shot up, went down, then we're now at $19. I still like the business. I still think it's actually undervalued and might actually be an acquisition target. Um, but yeah, last quarter was a very good one. I think they have a conference or something like that. I think it's September, and Tom Brady is coming. I don't know, just a marketing thing, but guess when the goat comes at your conference, maybe people will pay more attention. So yeah, all in all, okay, okay opening, I'd say. Earnings wise, I think it's a pretty boring week before the big one next week. We'll have, I think Nvidia is next. Yeah, Nvidia next week.
Yeah.
Salesforce probably, maybe Snowflake as well. We have Alibaba. So this week is a week where we can all chill out a little bit, see what has happened over the past couple of weeks. We will be here when the market, before the market opens, of course. We'll talk a little bit about companies that did report. Probably tomorrow we'll touch a little bit on Palo Alto. We will have Home Depot in the morning as well, and then we can touch on whatever other news pops out during the day. So with that, see you all in the next one, and thank you for joining. Bye bye.